and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are mixed in journey towards financial freedom. They'll be my financial development and financial well-being, so hopefully you, like me, can reach your goals sometime in the future. Now let's get into this latest video. Now this latest video is about my individual savings account, my stocks and shares ISA during the month of June 2023. Now, it's not to boast or brag or say, look at me, but it's to say, well, if I can build a portfolio of a sizable note worth nearly six figures, then you can also. So let's dive into this latest video about what's happened during the month. The aim of the plan is an annual year-on-year growth of 10%. For 2023, we're looking at dividends of £2,400, so let's just take £200 a month, and a year-end valuation of £94,000. So at the start of June, the portfolio was worth £77,579. At the end of the month, it was worth £79,062, so a profit of £1,483 in the month. Year to date, 5.26%, and as some kind of comparison, the FTSE 100 is up 0.8% for the first 6 months of 2023. Now, if we look at the contributions, £764 during the month, and for the tax year to date, £2,034.84. Platform provider fees are charges monthly fees of £12.45, which is average and is based upon a portfolio percentage. Now, where are the holdings within the portfolio? So we look at the following graphic. Quick overview: predominantly UK and Europe, 63.58%, 22.51% in USA and Americas, and 13.91% in Asia and emerging markets. During the month, we received some nice dividends. So across our holdings, our shares, we record a yield. So the portfolio has given us a yield of 4.94%. During the month, we received the following dividends. Legal and General gave us £508.58, which we reinvested on 209 new shares, which will obviously increase dividends later this year and also next June. We received £22.62 from HSBC, which gave us 3 new shares. Again, we increase dividends in future. And AJ Bell, the platform provider, gave us £22.01, which we'll keep in cash, and we will top up an existing holding sometime in July. So during the month, we received £553.21. Year to date, £1,371.32, which is £171 better than what we expected at the start of the year. So let's look at the funds or the shares held within our portfolio. So at the moment, we own 9 shares, 5 in profit, 4 in loss. Total value of £35,562 makes up 44.98% of our portfolio, of which 38.78% is in the FTSE 100 and 6.2% is in the FTSE 250. So our largest holding is Legal & General, the insurance company, 3,860 shares, £8,800, 11% of our portfolio. Does what it says on the tin. Safe, secure, boring, but it is giving a very nice yield, let's just say, of around about 7 to 8%. Our next holding is Lloyds Banking Group, 16,928 shares, £7,400, makes up 9.3% of our portfolio. And then back to the insurance companies we own: Aviva, 1,264 shares, nearly £5,000, 6.3%, again, very nice yield of around about 7-8%. Now, away from the banks, we own Card Factory, the retailer, 3,207 shares, nearly £2,900, 3.6% of our portfolio. Has had a very good run lately, very good results. It is cash rich, but it's not paying dividends because of, shall we say, covenant issues during the COVID. But dividends will be restored in 2024-2025, but a very good recovery play. Still expanding, and sales have been very good during the last recent results. And then back onto the banks, we own 410 shares in HSBC, £2,500, 3% of our portfolio, And we did purchase another £750 in the month because it's given a very nice yield. Quarterly dividend has been reinstated, and it is going to give a special dividend at the start of next year. Also on the banks, we own Barclays, 1,588 shares, £2,500, 3% of our portfolio. And we also own 936 shares in NatWest, £2,300, 2.85%. Now the banks have had a good run lately. They've had very good results, very good dividends. We have seen 13 interest rate rises. Margins increased, profits increased, dividends will be increased. But they are under some kind of pressure. They are increasing mortgage rates a lot more than what they're increasing the banking rates. And we own 844 shares in Sainsbury's, £2,300, 2.9% of our portfolio. Everyone needs to eat, everyone needs to shop. Has been on some kind of cost of living crisis, but it will pay a very nice dividend during the month of July. And then our final holding is AJ Bell, the platform provider. We own 629 shares, £2,000, 2.5% of our portfolio. As seen, some kind of growth stock, is growing customers, shall we say, from the platform we use, and it did pay a very small dividend during the month. So a collection of shares, predominantly based in financial service insurance, because what we know understand, but we can just switch off. We've got no reason why we're going to sell any of them shares in the short term, shall we say, and let's just say it gave us some very nice dividends during the month, which will reinvested within the portfolio to grow it substantially over in the coming months. Our largest holding is a passive ventures tracker fund. If it's done for diversification, it will cover numerous markets we can just switch off. Okay, £17,174 makes up nearly 22% of our portfolio. We own a legal and general technology fund, owns around about 270 stocks, predominantly US based, but the S&P 500 has been driven by, let's just say, 7 largest stocks, all held in the fund, makes up 10% of our portfolio, had a very good run of results in 2023 after a very poor 2022. We own a quite selective Ballygifford positive change, £3,843, 4.9% of our portfolio, owns about 35 companies in ESG, but the fund is in profit. One fund that has struggled lately is a US smaller company fund, £3,016, now back in profit, makes up 3.82% of our portfolio, has struggled during the last 12 months, but it is back in profit. One fund that has struggled though is a China fund. We own £2,633, 3% of our portfolio. China is the second biggest market in the world, but it has struggled because of the COVID restrictions in the last few months, shall we say. We own a mid-cap fund in the UK, £1,900, 2% of our portfolio. We own an emerging market fund, £700, again, 2% of our portfolio. Now, other funds we own a European fund, we own a AIM fund, we own a UK equity fund. And our smallest holding is stayed at the same level. It's a fund within Russia. Obviously struggled because of the Russia-Ukraine conflict. We put £500 in. It was showing a nice profit of over 20%. And ever since the conflicts, it struggled. It's now at £224. But thankfully it makes up 0.28% of our portfolio. So although it struggled, it is a tiny percentage. So let's just say a collection of 12 funds. Okay, some in profit, some in loss. But it's done for diversification because we were solely UK based when we started the portfolio. Remember, it's not a get rich quick scheme. Okay, we own, shall we say, 21 shares and holdings across numerous sectors, but all done for diversification. And we've had a decent month. So we're over 5% for the year, whereas the FTSE is, shall we say, less than 1%. But it just goes to show, if I can build a portfolio of sizable note, you can too. Just need discipline, take some steps. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.